but have you ever tried to send money out of Africa? It's very expensive, it's very clunky. There's so many African diasporas in Africa, i.e., like a Togolese person, me, who moved to Kenya, a Kenyan person that moved to Uganda, a South African person that moved to Egypt. That's the diaspora. And there's a lot of this that happens that is actually not documented or recorded. Yeah. And like the Africans we move a lot. And a lot of us are diasporas, we don't even know it, right? And the mission is, how do we make it easy for like people to invest where borders are not like a blocker? And that's where Borderless, the name, came from. Borderless is very focused on execution. 400 billion actually comes from the gap, the funding gap that currently exists in Africa. Like, we need to invest 400 billion on the continent to just come to like zero. An angel can write a $25,000 check, meaning that they are essentially taking all the risk. And with angel investing being super risky, the chances of them getting that money back is very low. But when you're part of a collective and you have 25,000, what you can do is you can invest in 25 companies. But with Borderless, starting running and scaling a collective would finally be easier. What that means is more and more people will now start collectives. Yeah. And that's what the part that I'm super, super excited about.
Welcome to the Fintech Forum powered by Chimoney. I am your host, Phylis, and today we're exploring community-driven investments. For years, traditional venture capital and institutional investing have dominated the market, but now there's a shift happening. More people are looking to investment collectives, syndicates, or decentralized models to fund startups, pool capital, and co-invest globally. But managing and scaling these community-driven investment models is still a challenge. To explore this, I am joined by Joe Kinvi, the founder of Borderless, a platform designed to help investment collectives and global communities organize, manage, and scale their operations. Joe has an extensive background in fintech, having worked on growth at Stripe, financial partnerships at Paystack, and as co-founder of HoaQ, an investment collective focused on Africa's startup ecosystem. He has seen firsthand how communities are reshaping investment models. And today we're going to break down where this movement is headed. Joe, it's great to have you here.
Thank you. And what a great intro. I need to rewrite my bio because this is so straight to the point. I love it. Thank you so much for having me today, Phylis.
Thank you so much. I did best with what I could find.
I love it. It's succinct.
So before we get into Borderless, let's start with your journey. You've spent years working in fintech, from Paystack, one of Africa's biggest fintech success stories, to Stripe, a global leader in online payments. You've also been deeply involved in investment syndicates through HoaQ. Can you walk us through your path in fintech and what led you to explore community-driven investing?
My fintech journey was one that I force created. So I trained as an accountant, like I did EY, I worked in banking, but I started seeing early that fintech, financial technology was really becoming a thing. And I really wanted to be a part of that. Financial and technology, because I just really care about those two coming together. And I forced myself into the industry. And how I did that was I quit my job like in 2016, very haphazardly. My boss wasn't very happy with how I did it. I think when I look back, I could have done it better. And I started talking to anybody that had anything to do with technology and financial related technology in Dublin. So I grew up in Dublin. I'm from Togo. And I was just talking to people. I was doing a lot of research. And at the same time, fintech was really a thing. So we had like the first wave of fintech back in the early 2000s with the PayPals. And then we had a second wave with your Stripe, although Stripe was in the early 2010s. Nobody really knew about Stripe. I think Stripe really kicked off the second wave of fintech. And then over time, you start seeing the Revolut, the Monzo, all these companies popping up, the N26. And I really wanted to be part of that. The first thing I did was when I quit my job, I went to apply to Stripe to get a job. And I think I applied on a Wednesday and I got a rejection on the Thursday immediately.
Wow.
immediately. But again, like the rejection was fair because I didn't have any experience working in tech, zero
Yeah.
experience, right? Again, I'm one of those, I was just hoping for the best. Hopefully, they look at because I was qualified and I had all these, skills. But I don't really know what role I applied for. I think I applied for like support because there was no role that was very fitted for somebody who had my background. And then I ended up working for this insurtech startup in Dublin, and this guy called Jesus. I always mention him, like he gave me a chance to just come and come my teeth at technology. And when I got to the company called Wisabi, I was doing everything. I was doing everything, and I think at one stage I was even doing what is now known as product management, but I didn't know what it was called then. And this was again like 2016, 2017.
Yeah.
I was there for a while, and like great company, but it was very tough for them to raise capital, and I was quickly burning through my savings. Then I'm like, okay, well, I need to, like, again, I don't come from wealth or anything. I needed to find a way to make more money that I was spending, basic
Yeah.
economics. So early 2017, I went back to work. I got like, it was a contract role for this other bank. That job was paying so well. Like it was great pay. But again, for me, it was just a means to an end, less like something I was passionate about. I just needed money to, well, again, looking back at it now, I just needed a runway, like a long runway. So I did that for like, I think 6 months, and then went back, tried to build my own startup. Again, I started burning through my savings. I was pitching this idea, this startup I wanted to build in the music tech space because, I was, again, like I was doing so many things and I was just passionate about technology. And then that one didn't work out. Then I ended up luckily joining this startup, a fintech startup called TouchTech Payments. With everything that I know now, if I look at TouchTech, I probably wouldn't have joined. Because the company, it's great product. They didn't have, I think they had like 2 customers. They were selling to banks. They had 2 customers. The bank, money in the bank wasn't great. But again, you don't know what you don't know. And I think sometimes being naive really, really helps. But I joined this company, I think it was like October 2017. And it was finally like, that was then when I realized, wow, I broke into fintech. I broke into this, and I was the head of finance because I still had a really good financial background.
Yeah.
But I was helping with a ton of stuff. Like it was nothing, you can't see my apartment, but like it was a very small room. We had desks around, and it's like 8 people, mostly engineering, with the 2 co-founders, and then me, and then this lady called Lucy, who was like, I think she was supposed to be a project manager, but she was doing everything. And I was supposed to be like head of finance, but like I was doing payroll, I was doing HR, I was doing every single thing. And this was where I firsthand experienced what it is to build a really good product with really good people who cared about nothing but just like the mission of the company. So we were there. TouchTech went through its ups and downs. We went through a lot of ups and downs. Yeah, like office politics, not amongst the staff, but like we had a board who I don't know what term to use. They were a lot older than us, so they had a certain way that they think we should behave.
Yeah.
But like we were all in our 20s and 30s, and we're just like, you guys don't know what's happening. But like there was a bit of a imbalance between the team and the board. I was slightly old. I think I was 28, 29 at this stage. So I was able to I kind of somehow sat in between the board and the founders. And it was a good place to be. I loved my job. There was no come to work at this time or come to work at that time. Anyway, long story short, we sold this company to Stripe in 2019. Long story short. And I think it's exactly 6 years today, actually. Well, not today, but like April 2019 when we sold the company. And as luck would have it, I finally got a job at Stripe through this acquisition. Yeah,
Wow.
yeah. It took so long. I think my first application to Stripe was in 2016 or
Mm-hmm.
2017, and I ended up joining in 2019, which for me is
Wow.
like maybe fate. I was supposed to be here, Um,
Yeah.
I was supposed to
Yeah.
be here, and working at Stripe was as amazing as everybody talks about it. Like it's such a great company. When they were interviewing us, and our interview wasn't your standard interview for like a job application, it was more like, we're buying this company. Where do you see yourself at Stripe? They were like, these guys were too nice. Like, what is happening? Why are like this thing was it literally felt surreal. And then when you go
Mm-hmm.
inside, it's
Yeah.
actually as surreal as you think. And that's where I learned that like you don't have to build you can build a great culture with great people who really, really care about their work, and your company will prosper. Stripe has, and I believe still has, one of the best cultures that I know. I'm sure there's a lot of good companies out there. So when I got to
Mm-hmm.
Stripe, I essentially helped move everything from the previous company to Stripe. I spent maybe like 2 years managing that product inside of Stripe.
Mm-hmm. Yeah.
Everything like I did again. I was so lucky because Stripe didn't pigeonhole me. They asked me, "What do you want to do?" I'm like, "Damn, guys!" And I really got to just do the things I wanted to do, and it was
Mm-hmm.
amazing. 3 years at Stripe. So I did everything. I did support. When the pandemic was hitting in 2020, they're like, well, we need everybody on support. I'm like, great, let's do support. I think I worked on support for 3 months. And one thing people know about Stripe is Stripe's customer service is amazing. And I literally got to sit, well, virtually beside the people that make this experience amazing. And that was like, I realized how important putting your customer first was. And I saw it and I'm just like, wow, they were so empathetic. Even when they tell you no to you, you're like, oh, okay, I'll take it. Because like when you say no to customers get angry. But
Yeah. Yeah.
the way my colleagues were doing it, I'm just like, damn. So that was where I started learning about empathy. And
Mm-hmm.
it's just such a great culture. Anyway, sorry, I digress. I was there for 2 years. The third year, Stripe decided to shut down this product that they acquired. And who's best placed to make that, call it wind down? Me, because I know this product inside out, and I led that. And when we finished the wind down, they again same question. They're like, "What do you want to do?" I'm like, because the product is gone, so I had a couple of options. I didn't want to go back into finance because guys, I've done finance, please, enough. I had the option to go into account management, which I'm like,
Mm-hmm.
I like account management, but like I wanted to do other things. I wanted to go into partnerships. I even applied for a role in the M&A team, which I didn't get. So like I had a lot of options at Stripe,
Mm-hmm.
and at this time, I think it was like 2022, Stripe had already acquired Paystack. So I said it to like my manager, my boss's boss, like, hey, I think I
Mm-hmm.
want to do something on Paystack. I don't know what it is. So I convinced her name is Ekene. She was the chief of staff of Shola, who's the Paystack CEO. So I reached out to
Yeah.
Ekene. I'm like, I need a meeting with Shola. Like, I want to talk to Shola. I want to talk to Shola. So I ended up getting that meeting with
Yeah.
Shola, which was actually an interview. So we got on that call, and Shola was interviewing me. And it's like, why is this guy interviewing me? Anyway, he was like, hey, we have this role in financial partnerships. It's not very well defined. And I love when things are not defined because I actually get a chance to define it. Like,
Yeah.
hey, financial partnership, this and that. I just happened to be going to Lagos, and I met the guy who led the financial partnerships team. His name is Fisayo. We're supposed to have a lunch for like 30 minutes. We were there for like 2 or 3 hours. So he was like, I think this was November 2021, 2020, like 2022, around that time. And Fisayo and I just spoke for ages. And he's like, yeah, when do you want to start? I'm like, oh, okay. This was also another interview. I didn't know that. Um, and yeah, so I got to Paystack. I worked primarily on Ghana, and today's Tuesday. On Sunday, I met the guy who leads Ghana. His name is KJ, and he's like, all the work that you did there, it's finally paying off. So one of the things I'm proud of that I did at Paystack is I helped I helped a lot with the financial partnerships team. So our financial partnerships is the things that people don't see at the back end.
Yeah.
Like how do you plug into the banks? How do you plug into the MNOs? And I did a lot of that work. And KJ tweeted that like we had war stories. We did great work, I think. And that gave me an opportunity to really have a great insight into what payment in Africa looks like. And like and a lot of the products that Paystack is releasing now, like I wrote, not me, like we wrote a lot around it, mostly around like how can this happen? There are various ideas, and I got the opportunity to be part of that writing process. Back again, the thing with financial partnership is a lot of the work that you do doesn't actually become reality a couple of months or years later. And it's such a pleasure to hear now that some of the stuff that we talked about back then are finally coming to life now. And I'm so excited for all the work that Paystack is doing in Africa. So yeah, that's a bit of the journey into fintech. And I just like, they say something around like all companies will become fintechs, and it's somehow true because payment is so core to any business. Like every company has a payment component. If you're not doing that, then you're just a charity. And like, with technology combined with like financial infrastructure and money movement, I think the future of fintech as a whole, as an industry, is so bright. And I'm super, super bullish on it. I don't even remember what the question was, but sorry.
Yeah, you have answered the question. You have talked about your path into fintech, which is really incredible. I also love the bit where you talked about you even tried exploring bits in music tech, which is something I'm also passionate about, but that's a story for another day. And another part of my question was, what led you to explore community-driven investing?
So my first step into community work was in 2016. So it was around the time that I was transitioning out of working in financial services, and I set up this community called African Professional Network along 8 other people or 7 other people, and it was just like it was a community collective of people based in Ireland. And this was where I got the opportunity to really be a community guy. I actually ran this, and I stopped running it when we were selling the company to Stripe, because it was just like I think between January and April 2019, I worked every single day. And I just didn't have bandwidth for anything else because, again, this is like the most important fintech acquisition that's ever happened in Ireland. Of course, and I got to like have a front seat role. So like what I did was I had to essentially pass over the organization to somebody else, and not pass over, like we had to elect a new president, and I didn't run again. I just didn't really have the bandwidth to do it. And so that was my first opportunity to be a community manager. And in 2020, a guy called Newbie, who became president after me at the APNI, who also happened to work at Stripe. So when we got acquired, me and him were spending a lot of time together. So I was essentially passing over like all things APNI to him, and we spent like a lot of time together. Yeah. And like he started telling me about like Africa Tech. He used to be a founder, and like he was like, oh, maybe we should see how we can like invest in African founders. I didn't know anything about like investing in Africa at this stage, nothing. And like he convinced me. I'm like, okay, let's try it. Like, but like I wasn't an angel. I didn't know anything about angel investment. And the way we started HoaQ was we were learning, and we wanted to learn with people, right? And that's how HoaQ started. We just happened to be the ones with the idea, and we pitched it to a couple of people. We worked. We raised like at the start of the pandemic, we were sending LinkedIn messages to people, which is, hey, we're launching this. I think we called it the fund back then. So like our first email, I don't want to say on this because people be sending me spam messages, but like it had fund in the name. And but again, we didn't know anything, but we were learning. We want to learn alongside people. And then we wrote, like we made the first investment, we made another one, then we made another one. And when the Stripe acquisition happened of Paystack in October 2020, we woke up one day and we had this mailing list. And the first website that we had was a Tumblr page. Like it was literally the most basic, like it's so basic. It was a page. But we had a way where you can just join like a MailChimp mailing list. And we woke up with like hundreds of people who joined this mailing list. We're like, who are these people? Who are you? A lot of them were like people in the diaspora, like us, who wanted to invest in Africa. And they're like, oh, we heard about what you guys are doing and we wanted to be part of it. Well, okay. HoaQ was very informal. Like we were sending money to a newbies account and we're doing the transfers, all this like, so we had to formalize it in 2021, which we did. And we went to a bunch of lawyers and the first legal fee we had to pay was €5,000. I'm like, yo, I can't, 5,000. That's a lot of money, guys. You're killing me. So we were like, okay, well, how do we cover the cost of this thing, right?
Yeah.
So we suggested a membership fee to the collective, and people were like, yeah, sure. So that's how we introduced the collective fee. Again, like we were so transparent with everything. And people knew what was happening and they were fully like up to date. And even when we got the bill, you know, the legal, so people had insights into everything that was happening. So it was very easy for them to like, yeah, you know, I can pay $100 or $200 to kind of contribute towards this, you know, legal fee. And yeah, so I think the first year of HoaQ, we made like, I think like $30,000. It was insane amount of money. And surprisingly, Nubia and I we didn't take profit. So we took the any profit that we made, we just reinvested in other companies.
Wow.
Yeah, we were again like we cared more about like investing than trying to like build a business out of this.
Yeah.
But over time, the more we did, like people started knowing about HoaQ. A lot of founders would reach out to us. A lot of founders who we invested in would introduce other founders. And yeah, it just kind of grew like very organically. And at the same time, while HoaQ was doing relatively well, other collectives were actually dying. And again, we worked in payments. We had a community that was willing to pay like a membership, which will help us offset the cost. We did not manage HoaQ full time because like it's not supposed to be a full time job.
Yeah.
And we, you know, so that's how we were able to reinvest like profit, TTC, everything else.
Yeah.
But also we realized that there's a lot happening. So we hired this lady called Folakimi to essentially manage the club full time while we were still working part time. Right now, Folakimi is the general manager of HoaQ, and she's excellent.
Yeah.
She is excellent. Like, wow. So Folakimi knows HoaQ probably better than us at this stage. And so that's the trick is we had somebody who was managing the club while we still had our full-time job. But like all these collectives were dying. I'm like, what's happening? And I spoke to a couple of them and like, it's just a bunch of stuff. It's not sustainable. Like moving money was just difficult because, you know, it's mostly African diaspora, people across the world. And like if you're in Nigeria, you want to send money to towards a company that's based in the US, you're essentially moving money. Well, if you're investing in a Nigerian company, most of them are Delaware incorporated. So you need to take your Naira, send it to the US, hoping that the bank will accept that money. And then that money will come back to the Nigerian company. Like it's crazy. Like when you look at the weird things, the legal was difficult because people were dispersed everywhere. Like some syndicates couldn't even use any tech platforms because they're having to abide to other rules. For example, like if you run a collective and you want to use AngelList, you'll have to follow the US accreditation rules. And accreditation is, again, you have the ability to make an investment. In the US, I think you need to make, $200,000 per annum and have assets over $1 million. The average African, actually, only 5% of America qualifies to these Like
Yeah.
Africans will have no chance.
Exactly.
So
Yeah.
if you run an African or diaspora collective and you want to use AngelList, forget the costs. You technically cannot because you don't meet the accreditation rules, right? Like a lot of people have gotten around it, but like it's just so stringent and it doesn't work for Africa or diaspora collectives.
Yeah.
And so like we kept seeing all these like small problems. There isn't a big problem, but it's like the small problems add up. And it just
Yeah.
makes it harder. People will do like one or two deals and then the bank is already flagging them. The bank is asking a ton of questions. They don't even know what the KYC rules look like. The accreditation is difficult. And I'm like, first of all, we need more collectives. Like HoaQ is not enough. Like HoaQ is just one.
Yeah.
We need so I think as we're speaking, HoaQ has done slightly over 4 million invested capital.
Oh, that's amazing. Yeah.
Yes, but it's not good enough. Like I think we need at least 1,000 HoaQs. So take 4 million, multiply by 1,000, that's 4 billion. When you can deploy 4 billion towards Africa, that is actually a great number and that can make a big difference. And when you look at the number, it's actually not impossible. Like it's not impossible, it's doable so the thing is, not everybody can join HoaQ because we have our own thesis, we have a way to do things. We don't invest in certain industries. And like different collective want to do different things. Can we build technology to enable them to do what they want to do within their collective? And that's where Borderless comes in, right? So when I was leaving Paystack, I had two options, So at this stage, end of 2023, I've spent 4 years, 6 years altogether, if you count in touch tech, 7 if you count in the insure tech that I worked at. And I had the option to go get another fancy fintech job or follow my purpose, which is how do we deploy more capital to Africa with the people that care about the continent, aka the Africans in Africa and the diaspora. And that's where I started tinkering with Borderless. Back then we called it platform. It started with like HoaQ platform, and then we dropped the HoaQ because we didn't want to pigeonhole the technology. So when we registered the companies like Platform PLTFM Technologies Limited, and then over time, we kept pitching this company as borderless investments, borderless this, borderless that, because the diaspora is truly borderless. And when we talk about the diaspora, people often think that it's the people that left Africa. There's so many African diasporas in Africa, i.e., like a Togolese person, me, who moved to Kenya, a Kenyan person that moved to Uganda, a South African person that moved to Egypt. That's the diaspora. And there's a lot of this that happens that is actually not documented or recorded. And like the Africans we move a lot. And a lot of us are diasporas, we don't even know it, right? And the mission is how do we make it easy for like people to invest where borders are not like a blocker. And that's where Borderless, the name came from. And like we built something, tried it with HoaQ, and we got a lot of feedback. We pitched to a lot of collective managers. We got a lot of feedback. And last year we started rebuilding the application, which is now Borderless. And I'm hoping that by the time people are watching this, they can actually go to onborderless.com. That's our website, and go check out what we're doing. But the mission is immediately, selfishly, I want to be responsible for enabling at least $1 billion going to Africa or Africa investments every year. The mission is actually 400 billion, but hey, let's baby steps. I'll pause there. I know I've said a lot, but yeah, that's how I got into collectives. That's where I am now. I want to enable the next 1,000 collective to invest in Africa, across Africa, for the diaspora, the whole of it.
Awesome. You've talked a lot, and you've answered the next question that I was getting into, which was like, at what point did you realize that existing platforms and investment models don't fully serve investment collectives, and like what inspired you to start building Borderless? So you've answered that question, and now just going a little bit back, some of the people who may be listening to this might be new to the term investment collectives, and we've mentioned it a lot. Could you kindly break it down to them? And how do investment collectives differ from traditional venture capital or angel investing?
Yeah, so well, let's start with angel investing. Angel investing is Joe is an angel, aka has a lot of money, finds a company that needs capital,
Yeah.
and I invest. I essentially become an angel. I actually hate the word angel investing. Like it gives like savior complex because an angel comes to save you, right?
Yeah.
So that's the first thing. And angel investing started back in the 70s where all these people that have made money, they decide to write big checks to support this in early stage companies. A fund is your what they call a fund manager. You go to what they call a limited partner or limited partners. They're usually like individuals, they are government agencies, they are like all these like there's FDIs, all these like big corporations that
Yeah.
will essentially give you money to manage on their behalf. That's what they call a fund manager. And they don't tell you, you have a thesis, but they don't tell you what company to invest in. You and your fund managers will decide how you allocate that capital in line
Yeah.
with the thesis that, and the money that they've given you. So that's what a fund manager is. You have to find deals, you invest. Like, again, the thesis is very like inline, and most of the time your LPs somehow tell you the thesis, which is a whole different conversation. But a fund manager essentially makes investment decisions. A collective is a group of people that come together. They have a thesis, but when they bring a company, each individual makes the decision to either invest or not. That's what makes a collective a collective. And like you don't put any capital up front. You only invest when you see a deal that you're interested in. And yeah, that's pretty much what a collective is. And most collectives are informal.
Yeah.
They like very few people do it full time. And yeah, because like you're not a fund manager. You literally find deals and you share with the people that you co-invest with. And yeah, like a collective has maybe one, two, three managers, and sometimes the manager bring the deal. Sometimes people in the collective bring the deal or the deals, and then you invest on an ad hoc basis. It's very ad hoc. Often, like collectives say, "Hey, we want to do X amount of investment this year, this and that," but there's not really like it's not very. It's supposed to be flexible.
Yeah.
And a lot of collectives have an education angle to them. Meaning, again, HoaQ as a collective, we have an education angle. We have a ton of resources. One of them is called HoaQ Academy, where we essentially help people become first-time angels, first-time collective investors, not angels. And angels are supposed to be super, super rich. Collective managers, collectives are like, again, you're not putting a lot of capital at play. The beauty of being part of a collective is you're not investing a ton of money, meaning that you're sharing the risk with a couple of people. So, for example, we want to invest in a company, it's 25,000.
Yeah.
An angel can write a $25,000 check, meaning that they are essentially taking all the risk. And with angel investing being super risky, the chances of them getting that money back is very low. But when you're part of a collective and you have 25,000, what you can do is you can invest in 25 companies, right?
Yeah.
$1,000, right? You can do that, or you can do 5,000, 5 companies, and that allows you to spread your risk. And the other thing collectives allow you to do is access. Like, as a founder now, there is no way I am like if somebody say, hey, I want to invest 1,000, I just send them to an SPV or something. Like founders, our time is very tight, and I'd rather pitch 20, like say 10 angels writing a $25 check than pitch 250 writing $1,000. Like it's just the, you get it. So, but if you
Yeah.
go to a collective and you pitch the collective together, it's still going to be the same amount of work, right? So being part of a collective really, really helps with, having access to deals that you probably wouldn't have access to. You
Yeah.
share the risk with your collective members, and when the returns come, you also share the returns. And collectives are designed to be low risk and also low effort. But what you typically see is like when you have a collective of say 50 people, you
Yeah.
have maybe 10 people who are super active and everybody else is passive, right? Because it's not their full-time job. So,
Yeah.
but collectives really allow you to meet, like the thing I love about HoaQ is I get to meet so many HoaQ members. There is like, I think 800 of them all across the world, which is beautiful. And we talk about many, many things. And there's that community thing that you bring to collective. Like we're learning together, we're investing together, we care about the same things, and we look out for each other. The
Yeah.
beauty with a collective like ours is like when we have a question, when the founder has a question. So if it's one angel, like that angel has their own domain expertise. Like they have one thing that they're really, really good at, they can help you. But when you come to a collective like HoaQ, we have 800 people. You are bound to find somebody within that collective that can help you with some like one specific thing. And like I like to believe that we've done great things by introducing founders. Like I did an intro between two HoaQ founders yesterday. Like we do so many things. Like we've introduced people to like people that they wouldn't even think they had access to it. That's because they're first a HoaQ portfolio company, but also they are part of the collective, meaning that we can tap into like such a wide community to help founders instead of them taking 25K check from one person that has one domain expertise. And also like the beauty of the collective is we're chill. Like we're not, and not just our collective, like we're not that, like we're not on your neck. We don't like. I don't think most of the collectives I know really really support founders instead of being like choking them, right? And I think that's the beauty of most of the African collectives I know is they're really really supportive of African builders, founders, people who are building for Africa, and that's why I think we need more collectives. Yeah.
Awesome. Awesome. Thank you so much for breaking that down. I think that's the most simplest, and you've even gone into details. And now moving back into borderless, you've noticed the challenges that investment collectives and the communities are facing. Um, can you share your approach in building borderless? What are the key things you're focusing on to make community-driven investing more accessible and scalable? And I believe you're the best person to talk about this because you've witnessed the challenges firsthand. So, yeah, what are the approaches you're taking on this?
First thing first, the basics. So the basics are you are a collective manager. You have a couple of people you want to invest with. How do you onboard them? Yeah, bring them on somewhere. How do you put opportunities in front of them? And
Yeah.
how can they make a commitment towards that opportunity? So like those are the basics. If you know the people as part of the collective, you know exactly what they want to see, you can do that. So like when we go live with Borderless soon, anybody can come and set up a collective. We will check, we'll do like, what you call, KYB or due diligence to see that they're not fraudulent. We'll get on a call with you, or we'll get to understand the things that you've done before. And if and when everything checks, then we give you access and you can invite all your members. You can make sure that you check the accreditation. We are registered in the UK, so we use the UK accreditation rules, which is more flexible than what you see in the US. And one thing I really want to do as a board member of ABAN is can we build an accreditation check for Africans in Africa? So watch out for that. That's happening. And then once all the members are like as part of your collective, how do you talk to them? If they pay membership, how do you collect membership easily? All these things happening on the platform. And then when you've all seen the deal, you discuss the Borderless is very focused on execution. So like we're not, once everybody has agreed that, yeah, we're interested in this deal, you post it, because we are also, what you call it, regulated in the UK. We will check that deal to make sure that it's not fraudulent, it's not overselling anything. And then when that check is done, all your community members or collective members will see the opportunity and decide whether they want to commit towards it or not. And then when they commit, we give them an option to send money towards the opportunity. So based on where they are, they will actually see the best payment method for them. So if you're in the US, we show you a USD bank account. If you're in France, we show you a Euro account. If you're in Kenya, we show you a Momo number. And it's very well localized, taking into account that, again, the diaspora is kind of spread across the world. We collect that money, hold all the money in one place with one of our like banking partners.
Yeah.
When you're ready, you're the collective manager, you're ready, you've done all the due diligence, and you're ready to, execute or send the money to the founder. You instruct us, we'll send the money on your behalf. We sit very well. So how we've helped you? We've helped you with onboarding all your members. We've helped you with the accreditation check. We've helped you showing the deal. We helped you collect the money, and we helped you essentially executing that investment. And when everything is done, anybody, so if you've invested and the deal is closed, you go into the Borderless dashboard and you can see that investment. When there's an investor update, the community or the collective manager usually receives that update. They go into Borderless, they post it, and everybody who's invested in that particular deal can log into Borderless at any time to view the investor report. And then let's say the company has worked great. Borderless, as the company is doing really well, and people want to exit, we also help you with that exit. So we'll collect the money from the company, and then we'll distribute to all your collective members. So we're also saving you for having to open a bank account. We're saving you from having to set up an account. We're saving you from having to get compliance, get regulated. Even if you know where to get regulated, and we're just removing all the hassle. We believe that we can reduce the manual work for collective managers by 80%, if not more. So, for anybody who already runs a collective and use Excel, please stop that and come and use Borderless, because Excel is just so time consuming. Think of Borderless as your collective AI agent. Again, we're not using AI or anything, but we're just making life much, much easier. You don't have to think. The hardest part is to find that deal and put it in front of your collective. We don't do that just yet, because that's not the business that we're in. But what's stopping us from, for people essentially using Borderless as, hey, I'm fundraising, this is my deck, these are my resources. Which collective do you think we should speak to? We should be able to match and make life easier for collective managers, so they don't actually have to go find deals. We'll essentially just source deals for them and give it to them to hey, based on all the investment that you've done in the past, we think this deal would be a fit. Would you like it? Yes, no. And then again, we want to reduce the work that collective managers do so that they can actually do more with technology, right? Yeah, you don't have to think about, I have to go open an account. How do I collect membership? Who has paid? Who hasn't paid? It's a pain.
Yeah.
And that pain has to stop. If people knew how easy running a collective can be, they will do it. But people don't do it because they know it's hard. They know it's very difficult. But with Borderless, starting running and scaling a collective would finally be easier. What that means is more and more people will now start collectives.
Yeah.
And that's the part that I'm super, super excited about.
Awesome. And then we'll get to the part where we have 4 billion funded to more African startups.
That's 4 billion is actually the low end. My goal over the next 10 years is to help invest 400 billion.
Oh, 400 billion.
Well, the 400 billion actually comes from the gap the funding gap that currently exists in Africa. Like we need to invest 400 billion
Yeah.
on the continent to just come to like zero. The gap we have is 400 billion. It's so big and that gap is widening every year. So like we need to be investing at least 40 billion or more every year. And over 10 years, we can actually close that gap. And the beauty of investment is when you invest in the right areas and you get returns, the returns actually like it compounds, right? So if you invest, I don't know, 40 billion at 10%, every year you get 4 billion on top of that. So the more we invest, the quicker we can close that gap. And that's why I say like we need more collectives.
Yeah.
A lot of the money that has been coming to Africa, when you look at the way funds are currently set up, when you look beneath the funds, the money usually come from like, you know, like FDIs, all these like organizations, which are often like big charities, donor, all these things. And the aid piece has stopped. USAID, all this funding has stopped. And what that means is a lot of the funds can't raise money anymore. Well, a lot of like, I know some really good funds are doing really, really well, but like raising funds from all these organizations is only going to get harder. And also a lot of these organizations are not African. They are Western. What that means is when these funds finally generate returns, they take that money and give it back. And that money doesn't stay in Africa. I think that's a problem that we need to solve for sooner rather than later. We need the money to stay in Africa so that it can compound and it can go into like a lot of investments. And when you invest with collectives, that money goes. And like most of the collectives that I've like worked with, a lot of them are African collectives or they're in the diaspora with African people. I mean that money is going to the continent and it's staying. We need as much capital to stay in Africa, and we're not doing that at scale. So like we have a lot of work to do. 400 billion is the gap. And I think you're going to need a ton of collectives. You're going to need a ton of funds. You're going to need a ton of people to really close that gap. And like we need to treat this as a matter of urgency. It's urgent. And like I would hate to live in this world 40 years later and Africa is still the same. That's an abomination.
True.
We all have to treat this as a very urgent matter because America is doing it. America is doing America first. So this other one the other day, which is like Europe first or whatever the case is. Like America is not going to save us. The West is not going to save us. Again, they've been trying for 60 years and it hasn't worked. The people that will save Africa is the Africans.
Yes.
So like we have to treat this as a matter of urgency. And I think all of us need to be doing our piece to contribute towards this great continent with all the amazing resources that we have. And this is why I do what I do. Like I could have gotten a very nice fintech job that pays very nice in London, but the purpose, like Africa needs to be better in my lifetime. And I know a lot of people that are doing this great work, and I'm so proud to be working alongside them.
Awesome. That's a very spirited vision you have, and I'm really glad you're building it with Borderless. And now there's another obstacle that you touched on, which is cross-border investing. And I know Borderless is kind of helping with this. And how are you thinking about that challenge? How are you thinking about solving it with the collectives that you're going to onboard on your platform?
Yeah, I mean, cross-border is like it remains a challenge, and that's why Western Union, MoneyGram, Lemfi, Chimoney will be in business for a long time, right? And I'm super lucky because I've worked for probably like the two biggest companies that solve our problem. And if you look at the corridor that we take care of is money from the West to Africa. And also money out of Africa, because when people, they get their returns, they want the money, or some people want to keep the money on the ground. And yeah, I've worked for Stripe, I've worked for Paystack, and I really, really understand the rails and what it takes to do that. Inward remittance is very easy. That's what a lot of people do. But have you ever tried to send money out of Africa? Have
Wow.
you? Yes. It's very expensive. It's very clunky, and
Yes.
we we understand the rails very well to be able to solve that. Over
Mm-hmm.
time, we want to really reduce the costs of like outward remittance. So, like I'm in London, and I've made an investment in Nigeria. I want to get my money back. It should be very easy to do that, even when I decide to take that money out. Right now, it's not. And that's one of the key problems that we're solving. We are integrating with payment partners for now, but
Yeah.
the medium term goal is to go build our own bank. And when you look at most of the fintechs, they are often geared towards consumption, but we want to be geared towards investments, capital movement. One of my friends who was buying a place in Kenya,
Yeah.
they like her money got stuck. Like it's like I think it was like 10,000 because the bank was like, "Where's this money coming from? Who are you to have 10,000?" Like the West still believes that Africans are poor. We're not, especially those in the diaspora, because like they will not even give you a visa unless you can earn more than the average person that live in that country. We're not poor. So like we need to stop. We need to build our own rails to enable this because we know the diaspora better than the banks, right?
Yeah.
So the bank is going to be our competition because we understand the rails. We know how to move. Like I want somebody to send 20,000 to Kenya and it arrives instantly. Right now, you actually can't do that. You have to go through extra due diligence and all this nonsense that are not worth it. In short, we know how to connect the rails. We understand the people who are sending the money, and we want to make it super easy for them without any friction. And Borderless is very African. Not all my investors are African, but the majority of my investors are African. And my hope is like we build something that's for us, by us, that makes our lives easier without us having to follow some accreditation rule that we have no idea of. And yeah, we get the rails. I think if anybody can solve it, it's us. And yeah. Anyway, sorry, I've gone a little bit too far into yeah. And to answer your question, like inward remittance, outward remittance is going to be really really important. Inward works, outward is very difficult, and that's something that we want to solve for. And we want to go as far as getting our own banking licenses to solve for this.
Awesome. Thank you so much for explaining that. And I know you're in the early stages. I know Borderless is launching soon. I'm really looking forward to it. But looking ahead, apart from the launch, what are the most exciting milestones that you are working towards?
So when we go live, we'll have two asset classes: venture and real estate. So like the two properties that we own in Kenya, it's bought by I think about like 40 people collectively, and that's the power of borderless. We've done it semi-manually, but we leverage the borderless rails to do that.
Yeah.
I want to see more and more people finally realize that there's trusted way to invest in Africa. But immediately, right after we go live, I want to be able to launch other asset classes like asset financing, like movies, like sports. Like there's so diaspora bonds. I know the Kenya infrastructure bonds pay really well. Like I don't think that should just be restricted to Kenyans in Kenya alone. I think
Yeah.
anybody in the world should have the option to buy Kenya infrastructure bonds. It helps Kenya. It helps in two ways. The first one, it helps Kenya have access to more capital to invest in more infra, but also it helps people who are outside of the continent to get better returns than what they get in the European bonds.
Yeah.
Now, like high risk, high reward type of thing, but like more and more people should look at the call it safer asset classes to invest in. There is a lot of things that we can invest in Africa, and we want to be able to open the global, like we want to open the world to see these investment opportunities, and we want to be the connector. Borderless will be the connector. We're starting with collectives, but We want to
Yeah.
enable anybody anywhere to invest in Africa. Get money in, but also get money
Mm-hmm.
out. And like the money has such a like I always encourage people to learn about money. Money is so like if you understand the economics of money, like money makes money. So when you have a billion, if you don't do anything, that billion will just keep making money because that's the economics. But also when you have minus a billion, you'll just keep paying. So like if you're in a hole, the hole gets deeper. If you're on the
Mm.
up, it goes higher. It's just the
Yeah.
way money works, right? So if
Yeah.
we can funnel as much capital, and even if when people get their money out, that money has already been productive on the continent. And
Mm-hmm.
that's what I'm optimizing for, like for productivity. And when
Mm-hmm.
you hear GDP, the P is productivity, right? And that's what I really really care about. Like I want to be able to open the world to
Yeah.
great investment opportunities across Africa because we have them. Do you invest in Kenya? Do you invest in any bonds? Anything?
No, personally, I don't.
Why not?
Yeah, I don't invest. But I'm still in the early stages of my career, so yeah, it's something that I'm looking forward to this year, and I'm still learning a bit about it, and just to make sure that when I finally get to that stage, I'm able to make sound financial decisions. But yeah, I don't.
Go with the safest options. Like go because money like safe. Stay do bonds. Something in Kenya, government bonds.
Mm-hmm.
They're actually very good. T bills, and even if it's like 10,000 shillings that you put in every
Yeah.
month, it
Mm-hmm.
compounds. Like I'm urging everybody in Africa, outside of Africa, to invest because that's how money works. And the
Yeah.
way, like, so when the government takes your money, they go
Mm-hmm.
to use it to invest in other things, and then those
Mm-hmm.
things generate returns and they pay you back. So your investment is actually helping your country. Yes,
Yeah.
you're getting returns, but
Mm-hmm.
your money might not sound like a lot, but 10,000 Kenyan shillings multiplied by 10,000 people, that's a ton of money. The
Yeah.
Kenyan
True.
government can do so much with that. And
Mm-hmm.
at the end of the day, the government has built infrastructure and you get
Yeah.
returned. It's a win-win. It's a win-win. And like whatever your lowest is, even if it's 1,000 shillings, you
Yeah.
have to do it. And it protects you as well because like your money
Mm-hmm.
now makes you money. Before you know it, you're gonna wake up one day like, oh my God, I have 3 million Kenyan shillings. Like money compounds. And I think the
Mm-hmm.
more of us need to study money and
Yeah.
understand that the reason why the US is so prosperous is the entire world buys the T-bills. They take that money, they invest in American infrastructure. That
Mm-hmm.
infrastructure generates money. They take that money to pay you back. We need to do that on our continent.
Yeah.
So, like, yes, this is my call to action for you personally. I don't
Mhm.
want you to don't give me your money. Your government has a lot of options for you to
Yeah.
invest, and you just have to start. 100 bob. Like
Mm-hmm.
start. Don't wait for next year because like next year like I saw this beautiful, I think it's Nike. It goes like yesterday. Yes, yesterday you say tomorrow. No,
Have to do it now.
start. Start now. Start simple.
Mm-hmm.
Yeah.
Yeah, and I think that's a really wonderful piece of advice that I'm actually following this year. Just start now, and I'm sad we're almost coming to the end of this conversation where we're just getting into yeah the good parts. But zooming out, how do you see community driven investing moving forward in the next 5 to 10 years? I know you have the vision for the 400 billion gap being filled, but beyond that, do you think we're moving toward? I feel like this might be controversial. Do you think we're moving towards a world where investment syndicates might challenge traditional venture capital? But also, like, what's the overall vision looking like for you?
I think they're actually very complementary. Traditional VC versus syndicates. For
Yeah.
example, Like if a syndicate invests $25,000 in a company, and that company is burning 10,000 a month. Burning is like how much they spend every month. They only have 2.5 months runway. But when a collective invests alongside a fund and that fund puts in 250K, that's now 275, and that's a very long runway. The
True.
fund will bring the money, the collective will bring their small money, plus all the add-ons I already talked to you about. So I think VCs and collectives are very complementary. And we've been so lucky to have invested along some great VC companies across Africa and diaspora. And we invest because they're somehow like protecting us, right? Because they have heavy capital, they have a lot of things that collectives don't have. So, like, let's not downplay the importance of VCs. VCs and collectives are very complementary, and they're not competition.
Yeah.
The second part of like what's the long-term vision is like I want people to just give it a try. Invest small, don't put a lot of capital in. We believe that Borderless we will not solve the trust issue, but we'll reduce it. We'll reduce the barriers so that more and more people know that at least your money will reach the destination, right?
Yeah.
And people still have that fear of Africa as a risky place to make investments. Have you seen the stock market in the past 3 months? Bloodbath. Bloody. Bloody, bloody, bloody. That's
Yeah.
America. That's
I like
America.
how
It's supposed.
like I saw HoaQ. Yeah, I saw HoaQ on the news and tech cover that you made, the investment that you made at Mono. Did Mono?
Yeah, we did
Uh,
mono, but yeah.
yeah, like it was really big, and I was reading about it, and I was like, wow, I really need to know the background behind HoaQ, and I'm really glad I had this conversation. But yeah, you
Yeah.
can,
But I know we were finishing, but one thing I wanted to say is like we want to reduce
yeah,
we want to make it easier for people to trust that you can invest on the continent. Risk is everywhere. How you mitigate that risk is a whole different story.
true.
And that's where the collective comes in. Like, collective, we're all looking out for each other, where everybody's doing their own version of BD. That doesn't guarantee the success of any company. But at least you know that like you're not investing in a fraudulent scheme, right? And also with Borderless, we want to open up other asset classes, which are less risky. Like real estate is known as a less risky asset class. We want to open up that. We want to do more with African governments and enable the diaspora to invest. Doesn't matter where you're from, you can invest. And we want to get to a stage where, like, while you, Phylis, you cannot hold the Kenyan government accountable, we as an organization, as the representatives of all collective, can now sit at the table with the Kenyan government to be like,
Yeah.
this works for the diaspora, this doesn't work for the diaspora. Oh, you want to pay the returns? Yeah, we'll take it, we'll distribute back. And like that's the beauty of collectives by themselves. Like there's a term in Nigeria which is like you hold somebody's collar. We want to be that collar that you hold, and we will do the best on your behalf, right? And so that you finally have something to trust. And I think that's what a lot of people are craving. That's what they're looking for. It's going to be a very long journey, but me personally and my entire team, it gives us a sense of purpose. And we love what we do.
Awesome. Thank you so much, Joe. This has been such a nice conversation, and it's clear that Borderless will really play a major role in shaping the future of community-led investing. But before we wrap up, where can people follow your work and stay updated on what's next for Borderless?
Well, Borderless, our website is on borderless.com. Hopefully
Yeah.
soon I'll own the borderless.com domain, but the voice
Until
still gets
then,
started. Personally,
yeah.
I am Joe Kinvi on all my social, like Joe, JoeKinvi. I am active on LinkedIn, as you said. I'm on Twitter. I'm trying to tweet more, but they want me to pay the premium, which is like, oh, guys, leave me alone. But yeah, I'm on Twitter. I'm on IG, and I'm hoping that when this recording is ready, we can like cross collaborate.
Yes.
Yeah, and also I spend a lot of time across the continent. I will be in Kenya in August. I'll be in Lagos in September. I'll be in Ivory Coast, Ghana, Togo, Benin, and Nigeria in December. So
Awesome. Looking forward to seeing you in Kenya in August. Really
I
looking
will be
forward to
there. I
that.
think, well, like Kenya is usually very quiet because a lot of people are on holidays and people are just about coming back. But yeah, we will do like an event. And one thing I want to do in like we've actually done events. Great, we did an event of 150 people in Kenya 2 years ago. It was huge. Yeah.
Wow. Too
But
bad it wasn't actually
the
more.
next
Yeah.
one will be in collaboration with a couple of collectives. Like Nine Band is a good friend of ours. V Band is a good friend of ours. Diaspora House has members, and we'll have like 3, 4, 5 different collectives that will come together because that's what Borderless is about. And yeah, when the time is right, I will make sure to let you know so that we can finally meet in person.
Awesome. Thank you so much. I'm really looking forward to that. And once again, thank you so much. Thank you so much for creating time. I've learned a lot. I feel like this was less of me asking you questions and more of me learning. And I'm pretty sure the listeners will have learned a couple of things too. And thank you for sharing your vision too. And we've now come to the end of this. And to our listeners, if you found these conversations insightful, don't forget to subscribe to the Fintech Forum and follow us for more conversations on investing, future of fintech, and financial innovation. Thanks for tuning in, and we'll see you in the next episode. Bye.